What if I told you that where you park your emergency fund could be costing you hundreds or even thousands of dollars every single year? Most people think all savings accounts are basically the same, but that assumption is quietly draining their wealth while they sleep. Today we're diving deep into the ultimate showdown between high-yield savings accounts and money market accounts. And by the end of this video, you'll know exactly where your emergency fund should live to maximize every single dollar. Before we jump in, let me ask you something. When was the last time you actually looked at how much interest your emergency fund is earning? If you're like most people, the answer is probably never. Or maybe you glanced at it once when you opened the account. But here's the thing that's going to blow your mind. The difference between a mediocre savings account and the right choice for your emergency fund can literally be the difference between having 3 months of expenses saved versus 6 months of expenses saved without putting in $1 extra of your own money. I'm going to share some numbers with you in just a moment that will make you want to check your bank statements immediately. But first, let's establish what we're really talking about here. Your emergency fund isn't just money sitting around doing nothing. It's your financial safety net, your peace of mind, and honestly, it might be one of the most important financial decisions you make this year. Now, I know what some of you are thinking. You've heard that emergency funds should just be liquid and easily accessible, and that earning interest is secondary. That's old school thinking that's costing you serious money. In today's economic environment, with inflation still impacting everything from groceries to gas, having your emergency fund work harder for you isn't just smart, it's essential. Let's start with high-yield savings accounts, and I want you to pay close attention because this is where most people are leaving money on the table. A traditional savings account at a big bank might offer you something laughable like 0.01% interest. That means if you have $10,000 sitting there, you're earning about $1 per year. $1. You probably find more money than that in your couch cushions. But high-yield savings accounts are completely different animals. Right now, the best high-yield savings accounts are offering rates between 4 and 5% annually. Let's do some quick math that'll make your head spin. That same $10,000 in a high-yield savings account earning 4.5% would generate $450 in interest over a year. That's the difference between earning $1 and earning $450 just by making one smart decision about where you park your money. But here's where it gets even more interesting. High-yield savings accounts are typically offered by online banks or credit unions, which means lower overhead costs that they can pass on to you as higher interest rates. The trade-off is that you might not have physical branches to walk into. But let's be honest, when was the last time you actually needed to go into a bank branch for your emergency fund? The beauty of high-yield savings accounts for emergency funds is their simplicity. They're FDIC insured up to $250,000, which means your money is completely protected. They're liquid, meaning you can access your funds quickly when emergencies strike. And they're straightforward with no minimum balance requirements at many institutions. Now let's talk about money market accounts, because this is where things get really interesting and where a lot of people get confused. Money market accounts are like the sophisticated cousin of savings accounts. They often offer higher interest rates than traditional savings accounts, sometimes even competitive with high-yield options, but they come with different rules and features. Here's what makes money market accounts unique. They often come with check writing privileges and sometimes even debit cards. That means you can access your money in more ways than a traditional savings account. Some people love this feature because it gives them more flexibility with their emergency fund. But here's the catch that trips up a lot of people. Money market accounts usually require higher minimum balances to earn their best rates. We're talking about minimum balances that can range anywhere from $1,000 to $10,000 or more. If your balance drops below that threshold, your interest rate often plummets to almost nothing. So if you're just starting to build your emergency fund, A money market account might not be your best bet right out of the gate. But here's where money market accounts can really shine. If you have a larger emergency fund, say $15,000 or more, and you want the flexibility of check writing while still earning competitive interest rates, money market accounts can be absolutely perfect. The interest rates on money market accounts can sometimes edge out high-yield savings accounts, especially at credit unions or smaller banks trying to attract deposits. Now, let's talk about the elephant in the room: accessibility during actual emergencies. This is where your decision really matters. With a high-yield savings account, you typically transfer money electronically to your checking account, which usually takes 1 to 2 business days. Money market accounts with check writing privileges can give you immediate access to funds, which could be crucial if you're dealing with a true emergency that requires immediate payment. But here's a reality check that most financial advice doesn't address. How often are emergencies so urgent that you can't wait 1 business day for an electronic transfer? In most cases, whether it's a car repair, medical bill, or job loss, you have at least 24 to 48 hours to move money around. So while immediate access sounds important, it might not be as critical as maximizing your interest earnings over time. Let's talk about fees, because this is where many people get blindsided. High-yield savings accounts typically have minimal or no monthly fees, especially at online banks. Money market accounts can be trickier. Some have monthly maintenance fees that can be waived if you maintain certain balances, but others charge fees for excessive transactions or if your balance drops too low. Here's my take on the real winner in this battle, and it might surprise you. For most people building their first emergency fund or those with smaller emergency funds under $15,000, high-yield savings accounts are the clear winner. The combination of competitive interest rates, low barriers to entry, and simplicity makes them perfect for the majority of savers. But if you have a larger emergency fund, value the convenience of check writing access, and can comfortably maintain higher minimum balances, money market accounts deserve serious consideration. The slightly higher interest rates and added flexibility can make the extra complexity worthwhile. Here's the action step I want you to take today. Calculate how much interest your current emergency fund earned last year. I'm serious about this. Log into your account and look at those numbers. Then use online calculators to see what that same amount would have earned in a high-yield savings account or money market account. The results might shock you into action, and that action could be worth hundreds of dollars this year alone. Remember, your emergency fund isn't just protection against financial disasters. It's also an opportunity to make your money work harder while it waits for you to need it. Your future self will thank you for making this one simple change. What type of account is your emergency fund currently in? Let me know in the comments below.